Hello traders, Cousin Vinny coming to you from theclosingprint.com on March the 15th, 2020. In this edition of your weekend video newsletter, we'll discuss the extremes in the markets while focusing on the NASDAQ and the S&P 500, both of which soared more than 9% on Friday. In addition to watching VIX and the extreme indicators, which are showing signs that dealers might start buying back shares as they're short puts that expire on Friday, while the rest of our indicators are at extremes and starting to show signs of reversing this week. And we had the US dollar rally rapidly, whipsawing the US dollar yen relationship with a huge spike that could be showing signs that the markets are about to rally this week as well. We'll keep an eye on that. In addition to the put-call ratio, which is showing signs of covering as well, as more calls were starting to be bought at extreme lows. The heat map is showing signs that they may reverse as well from extremes. We'll look at some IBD 50 names. We also noted that Bukowski's indicators are starting to show a reason to think we could see a turn in the short term, with 2 bearish patterns, 3 bullish patterns, and 14 patterns waiting for breakout. Bottom line, we're cautiously bullish. We're watching what institutions do. They need to monetize all those short positions that they have open, reflected in the negative gamma trade. And we're watching for international indices, which are starting to show signs of bouncing going into this week. The S&P 500 has been off 26.97% over the last few weeks, from top to bottom, 3393.52 down to 2478.28, bouncing on Friday over 9% and closing back above the 200 period moving average on the weekly time frame. The last time we did that was in December. Now, many were looking for this low to be tested. I think this is pretty close. The more significant benchmark being the 200 period, as traders watch for institutions to cover more of their short positions going into this week, the March 20 expiration. That would be classified as a gamma squeeze along with a healthy dose of short covering. What's worth pointing out is that we don't have the same fuel that can push us lower, that lends some credibility to the gamma charts, which highlighted less dealer activity in the middle of the week. Option volume again was very sizable at 3 million contracts traded, with the put-call ratio about 1.5, so there's some decent activity. But looking at the 320 expiration, there really wasn't much volume. So that means while we did see some short covering, we've not yet seen the activity to suggest that institutions have closed all of their positions or rolling for next week. And obviously, VIX is not done yet. With the Fed on Wednesday and OPEX on March 20th, Friday, there is a good possibility a lot of that institutional money at risk will monetize if we do move higher this week, with resistance levels noted just above 2950 up to about 3050, equating to 50% and 618 Fibonacci retracements respectively. In addition, the highest gamma strike shifted up from 2745 up to 3150, which is right around the 9 and 21 day moving averages. So expect resistance from this level, 2950, all the way up to 2900 and ultimately 3150, should dealers start to cover their short positions in mass. The same goes for the NASDAQ, off over 25% these past 4 weeks, showing resistance levels overhead in the blue shaded area, 50% and 618 retracement levels, as well as the 9 and 21 day as noted, while RSI has yet to reach oversold and the 200 period is down here at 6750. MACD has yet to turn, and we do see standard deviation at extreme, suggesting we could see a retracement this week if we see some sort of rally. Weakest, of course, was the Russell 2000 small caps, off more than 35% over the past 8 weeks, with resistance levels overhead back at a retracement to the 200 period moving average, as noted with the 50% and 618 Fibonacci retracements shaded in blue. RSI is oversold, similar to what we saw back in 2018. IWM also has this consolidation zone to deal with in addition to the 200-day on any retracement. For any lasting base to form, we need to see the leading stocks holding these levels. We saw on Friday, we can see the FANG stocks all rallied after the president spoke, while the daily charts reflect the reversal on Friday. Most of these are hammers, leading to a potential base in this area and a retest of the 50 period moving average and the 200-day just overhead as resistance levels. While this does look good and lend for a potential reversal that lasts, we would only be scaling in small increments, knowing full well that there could be more bad news before the markets can potentially firm and follow through. Again, the major thing that we're watching is what institutions do with all of that short gamma that we saw since the highs. While stocks from this group do have potential, we're watching how price action firms or gets rejected at the 200 period moving average. With RSI oversold, MACD needs to turn and standard deviation needs to drop back down, indicating that we would be heading back as a function of price to the 21-day in the short term. A base along this level would be very productive. Again, the key here is VIX. If our signal continues to turn green, institutions will have to cover and monetize the puts that they have, the bigger SPOOs on the big contract, which would lead to more short covering by dealers as they monetize their open positions, and a potential for the S&P 500 to rally back to the 2900 level in the short term over the next few days. As we can see, VIX is at extremes. No one needs reminding that we hit the 70 level, extremes we haven't seen since 2009, with a close near the lows of the session. So if we fade this week, that would be another sign that we would be looking for as a catalyst for a rally. Together with the VIX, the put-call ratio hit extremes as well, way outside the upper Bollinger Bands. As we can see, in each case where that occurred, we had rallies that lasted for several weeks and several months during the recent run-up from the December lows of 2018 up to the recent highs. So we're looking for the same thing to occur, knowing full well that there's still potential for bad news to hit the markets. So we're thinking retracement up to 2900, thereabouts, previous support resistance levels. Institutions cover into the March 20 expiration and the Fed meeting on Wednesday, and then a potential for a retracement back and a double bottom to help support a eventual return to a trending market once the coronavirus is in our rearview mirror. Also supporting a rally are the number of stocks advancing versus declining. In this chart, of course, advanced decline percent, S&P 500 top panel, mid caps, small caps, and NASDAQ in the lower panel, having reached extreme levels like we saw back in late 2018, indicating a repeat of what we saw then, and an eventual mean reversion as fear dissipates and greed starts to take hold, and we begin trending again. Finally, we have the New York Stock Exchange at extreme lows as well, hitting 10,054 last week. More importantly, we're looking at the advanced decline major accumulation day on Friday to start the week as well. We want to see that green on Monday and Tuesday, and elevated to start the week, Monday, Tuesday. And finally, we want to see tick cumulative continue the reversal of this recent trend to start the week. Last week, we do have the bond stock ratio at extremes, Looking for that to pull back in, as we did see capitulation in some of those assets, like AGG pulling back dramatically last week to this consolidation zone where we broke out back in November and December. We did bounce, so I wouldn't be surprised to see some mean reversion here as well, along with a greater than 7% drubbing on TLT, big outside week, bearish engulfing, with the ultra short 20-year TBT inverse of the TLT having a nice week as well. We were looking for a retest of the 19 zone. We got it on Friday. That pulled back in with a stop under the low of the day if you're still in this position. Additional hedges like SPXU and SQQQ helped soften the downturn as well. We did very well on this particular instrument since the third week of February, where this reversed and moved higher. We no longer have a position in SQQ, but we will keep an eye on it in case the market does see some weakness once it gets back up to those resistance levels on the S&P 500 at the 2900 zone. Junk bonds and high yield corporate debt also pulled back, but finished on a long-legged doji right at the 99 to 100 zone, above this volume by price support level that we broke above back in 2018 into 2019. Oversold conditions, looking for this to reverse back up as risk on investors might jump back in for a few days going into the March 20 expiration and the Fed meeting as the main catalysts. The Forex market saw the British pound US dollar underperforming, dropping off dramatically last week. For the past 4 weeks, in addition to the US dollar Japanese yen, which if you're bullish equities, you want to see this rising, we did have a huge rally. So keep an eye on US dollar Japanese yen, which did see some selling at the 20 period, the middle of the Bollinger Bands. With the strength in the dollar, you would expect to see commodities like gold. Additionally, the safety trade unwinding, we did see that dramatically last week with a loss of the 50-period moving average in green and all of these levels of consolidation that we saw to start the year. So for right now, best case scenario is that we see a little bit of a retracement on gold if you're in this. Worst case scenario, we retrace all the way back down to these lows near 1450 or so, as volume was above average and MACD shows momentum is still very bearish. Copper was also weaker. We did see a pullback that's reflective as a forward-looking indicator for the housing market, which also took a hit last week. Construction and building products, though I do believe those will continue to move higher. We do want to see copper gain some strength and start rallying over the next several weeks. Finally, there is crude oil, which took a big drubbing over the last few weeks, down over 55% before reversing and ending on a long-legged doji. Sectors are at extremes, ripe for improvement. We also saw some improvement in the international markets. We'll look for these to start to turn more green. Red from left to right each week. This is updated on a Friday. We'll watch for a lot of these international ETFs to reverse and move back towards the mean. So look for bases that we can push off of, like Argentina, Chile, Ireland, emerging markets, Canada, Australia, Sweden, and so on. A lot of these look like they could reverse more, and an area where you might think about putting some money to work as well in your longer term accounts. Scaling in as with anything else, especially if you're younger and you have a longer time horizon, 20 and 30 years before retiring. Finally, we see the S&P 500 spider sectors. In addition to real estate, transports, most of these are showing hammers. Looking for potential mean reversion here as well. And another reason for institutions to cover and monetize their short positions if we do see some follow through and a short covering rally over the next couple of days into possibly the next couple of weeks. Here are the IBD 50 stocks. If you're looking for the markets to return to more of a bullish stance, you want to see these leading growth stocks moving higher. Many of them actually look very good this week, as we'll point out in the next few minutes. With many of these growth stocks outperforming value, as you can see, IGX, IVX, the ratio between growth and value. Growth stocks had a very nice bounce and outperforming on a relative basis as this line continues to rise. So that plays into what we're looking at on the IBD 50. The better setups are stocks that are close to the 50-day or above the 21-day, with most of them showing relative strength, like EBS, which did follow through last week above the 20-day. GSX showing relative strength above the 50-day, while most of these are below the 50-day. Stocks like LAKE, Lakeland, supported at the 21-day moving average. Okay, so let's start off with some of these REITs, which are seeing some action, bouncing, volume above average. MACD is starting to turn. Histogram is making shorter bars. RSI is oversold. Should start improving. We'd look for it to move above 50 and for price action at first to retest the 200-day as resistance levels overhead. Stocks from the previous IBD 50 also look pretty good, like AMN Healthcare Services, bouncing at the 200-day. Huge reversal last week. This is the kind of action that we're looking for, where RSI moves back above 50, price action back above the 9 and 21-day, resuming the trend, MACD reversing on above average volume, as many of these healthcare stocks also reverse. We're also watching Alibaba, which is back above the 200-day. Nice hammer on Friday. Oversold conditions improving is what we'd be looking for. A move back above the 9 and 21-day, which is likely resistance in the short term. Look for a follow-through. Above average volume, but not surpassing what we saw on Thursday. Still developing, but looking better if it can manage to consolidate and base along the 200-day in the short term. We highlighted Benefit last week. This did reverse with a huge hammer on Friday. Look for this price action to continue. A follow-through day, RSI back above 50, and MACD histogram getting shorter bars on above average volume. Look for this to follow through as well. Many of these healthcare stocks continue to reverse. Cigna with a hammer on Friday as well, reversing. Thursday's price action still got resistance overhead, 200-day, 21-day, and the 9 EMA. All of these IBD 50 worth looking at. Big reversals on Friday, as we can see on Cirrus Logic, with volume increasing. Cyrus 1 reversing off of Thursday's action, follow through day on Friday, above average volume. Many of the solar energy names pulling back. This is a Chinese solar energy stock, reversing, RSI bouncing, holding at the 200-day moving average, reversing. Looking for a lot of these alternative energy names to also get some traction. Dropbox highlighted over the last couple of weeks. We were looking for this zone to hold and for price action to get above the 9 and 21-day last week. Didn't happen, of course. Starting to build some action here, supportive of a reversal, but not quite there yet. Look for a follow-through day on Monday, maybe a quick scalp up to the 200-day as resistance. If we manage to get above that, then reassess your position and potentially scalp it again Tuesday, Wednesday if it gets through this level, and maybe attack the recent highs. RSI will be above 50 on Monday, most likely. Emergent BIOSOLUTIONS. Last week we looked at this as a potential trade. It did shake out a lot of people. Reversed on Thursday. Follow-through on Friday was immense. RSI back above 50. Most likely institutions will be taking some profits into strength this week, so watch for any kind of flag or shakeout. Volume was above average Thursday and Friday, and MACD is turning. Facebook's back on the IBD 50. Many of these FANG stocks also look very strong. Looking for reversals. Mean reversion back to the 9. 21-day, and 200-day as resistance levels overhead, as well as this pivot over here at 173.09. Even web services companies like GoDaddy, reversing big hammer on Friday. Follow through RSI oversold should start to improve. 9, 21, and 200-day as resistance levels, as well as these pivots over here. Areas of interest, AOIs. GSX, this one had huge relative strength. Very notable, didn't pull back like everything else. Watch for a move back above the 9 and 21 day. This could be a winner. Had a nice trend after its breakout back in November and December. Innovative Industrial Properties, this company, as you know, buys and leases out warehouse properties used for the production and growth of medical cannabis, mostly. Some states do allow for recreational use as well, so there are those facilities that they buy and lease out to cannabis companies like Canopy Growth, Tilray, Kronos, that help this company. Conversely, if we do see strength here, it could be a sign for a reversal in many of those cannabis stocks as well, so we'll watch for those. This still has a lot of work to do with the 9, 21-day, and 200-day as resistance levels overhead. RSI oversold. Last time that happened, we had a nice rally for a few weeks, so maybe that happens back up to resistance in the short term. Many of these housing and home builder stocks got thrown out with the bathwater, obliterated, moving from the 40s down to the 20s before reversing on a hammer. Look for mean reversion back up to 200-day over the next several weeks for KB Home and other builders that we'll be watching in the short term. Many of the semiconductors also reversing. Remember, technology is ubiquitous. It's all around us, 5G, all the developments that are going to help with artificial intelligence and robotics. Microsoft, for example, had a very nice week last week, reversing on Friday, while healthcare-related companies like Lakeland holding the 9 and 21-day, looking for this to reverse and follow through. Institutions picking up shares on this pullback, selling into RIPs. We'd do the same thing if you're thinking about trading Lake or you have a position from the last couple of weeks that we've been trading this live and in the trading room. Lumentum Holdings also showing nice strength at the 200-day moving average consolidation zone. RSI starting to improve on above average volume. We'd like to see more, and MACD turning as a function of price. MSCI also reversing at the 200-day Thursday into Friday. Follow through day, look for RSI to rise above 50. Gets above the 21-day. This could follow through and test these highs. Draw a trend line through here as resistance levels just above that 300 zone, as this stock potentially moves higher over the next few days. Netflix we already talked about. Above the 200-day, look for this to retrace back to the 9 and 21-day first resistance levels and this pivot, gap fill, potentially RSI improves, a reflection of price. MACD turns and volume increases for an edge in Netflix and NVIDIA, which also held at the 200-day moving average. Another IBD 50 name that's showing relative strength, showing support at the 200-day. Resistance 9 and 21-day gets above those two this week or next. Look for a follow-through. RSI would be above 50 at that point. Need to see volume increasing and MACD turning as institutions most likely pick up shares that people were throwing away over the last few weeks. And we'll again start to sell into strength as we start to rally back to this 316 level if we're so fortunate going into the seasonally strongest months of the year. Palomar Holdings also discussed in the trading room and live as well as on the weekend videos. This one continues to keep our interest, holding at the 200-day moving average, forming a nice hammer. A follow through 9 and 21-day resistance levels again. These pivots, RSI is improving as a function of price. Look for a follow through day on Monday, Tuesday, potentially as a scalp. Short-term swing if these start to move higher. While stocks in the software and payment services groups continue to move higher. Paycom, as we could see, nice reversal Thursday, follow through day on Friday. Looking for a move back up to the 9 and 21 day and 200-day moving averages with RSI improving from oversold conditions. Just need to see more volume, and histogram and MACD turn back up as a function of price. Paylocity showing the same thing. And power integrations, I believe this one's new on the list this week. Back to the 200-day, nice hammer on Friday. Consolidation underneath the 200-day. Look for a pop back in the other direction above the 21-day. RSI will be above 50 if that should occur this week. As we look for these stocks to day trade, short-term, intraday, as these stocks potentially start to improve over the next several weeks, while limiting our risk on a day trade basis. Regeneron's back at it again, holding the 21-day, nice bullish trend above the 200-day. RSI is rising. Look for a scalp back up to the 500 zone, as many of these healthcare biotech stocks continue to show potential. Everyone looking for a cure for the coronavirus. I saw over the weekend that a Canadian company talked about having found a cure 2 days after canceling the hockey season. REPLIGEN also moving higher. Note the symbols are GEN and REGN. Often confuse these two. Price action is very bullish above the 21-day. RSI rising above 50. MACD has crossed. These look very good for a below $100 stock. This is probably going to gap up above 100 by the looks of it on Monday. Don't chase it. Look for an ABCD pattern for entries, exits, and stops. Solar Edge, another one of those alternative energy names we've previously mentioned. Looking for consolidation around the 200-day and then a base and a follow-through over the next several weeks. TAIWAN Semiconductor showed a lot of relative strength last year and then gradually started to see profit taking over the previous 8 to 10 weeks. Consolidating right at the 200 period moving average, looking for institutions to continue to pick up shares, RSI to rise, and MACD to turn and cross. Look for a follow-through on above average volume. 9 and 21-day are resistance levels. Look for it to get above that level. And then for a reversal and a move back up to the highs like we saw back here in August as a potential entry after consolidating for a few weeks along the 200-day before moving higher. TK Tankers, I'm not sure what's going on with the shipping industry, but saw a lot of relative volume over the last week on a lot of these names like Nordic American Tanker, moving back above the 200-day, consolidating underneath it last week. Look for these to continue higher. Along with TK Tankers, this is the first time it's been on the IBD 50, I believe, in some time. Look for a breakout. Fairly inexpensive name, so I'm not sure what options. You have to check those out this week to see what IB percent is. Maybe there's a trade there with spreads or just taking the shares and selling covered calls as it rises and Bollinger Bands expands. There's a lot of ways to trade this one. Bottom line, they look very bullish. RSI is rising, higher highs and higher lows. Volume is increasing. MACD is above its signal line, and the whole group is moving together. Teradyne, nice hammer, following through. RSI improving. XP, Chinese stock, recent IPO, nice hammer on Friday and Thursday, following through. Look for it to revert back to mean. The 9 and 21-day as resistance as RSI is oversold and improving. This one's probably going to gallop higher in the short term. In addition, make sure you check out these MarketSmith relative strength names that we've got listed, as well as the stocks in green that are from the top 20 volume percent gainers last week, with stocks like LRN K-12 Inc., provider of online curriculum, K through 12 students, virtual schools in 50 states. This is probably going to follow through. It's a fairly inexpensive name. Relative strength line is climbing, volume increasing above average Thursday and Friday. Sales reflect the potential for increasing over the next year. Stocks showing relative strength, no surprise here. Some of them were well-known names like Apple, AmerisourceBergen, Adobe, American Tower, Centene. On down the list, Lilly, also a stock that we have a position, small position in. We've been nibbling on shares. Apple showing relative strength right where you'd want to see it at the 200-day moving average. Adobe bouncing last week as well. Talked about that one live. Back above the 200-day, rallying back towards the 20 and the 50-day. Good sales, good quality name, excellent IBD metrics, moving higher on above average volume. Look at that volume over the last several weeks as we reverse back above the 200-day. Eli Lilly also showing relative strength, popping back up when the markets were still moving lower. Lilly was starting to move back up towards its consolidation zone, the blue area, looking for this to break higher in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on March the 15th, 2020 with your weekend video newsletter. Look for a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. And remember, we're watching for institutions to monetize all those short positions and negative delta unwinding into the March 20 expiration next week, as well as the Fed meeting. So look for that short covering rally to potentially get us back up to the 2,900 level. You got to see it first. Don't just throw money at it. Also, watch for international indices that bounce. It's also an area where we might want to put some money to work. Gradually scaling in a little bit at a time, knowing that we could see resistance and conditions get worse in the States before they get better, which means a potential reversal back down to support and testing of maybe the 2018 December lows. Take care. I hope this helps. We'll talk to you soon.